Hello and welcome guys, and welcome to this vlog. And yes, this is my third video on this particular subject, which is the review report of the committee which has been constituted by the MCA to report upon the usefulness or how to improve the usefulness of cost records and cost audit. As all of you are aware, cost records and cost audit are the two specific areas which are almost a monopoly of cost accountants, CMAs, that is all of us. But sir, we are just students of CMA course, sir. How is this, all these things are relevant to us, sir? And some of you might be asking, sir, in future we want to join industry, we want to join job. Would all of this impact us? Answer is a big yes. Everything which is happening in the profession will impact each one of us. Be it a student, be it a person who's entering into job after qualifying CMA, be it a person who's existingly into job after qualifying CMA, or be it a person who wants to or is in practice. It will impact all alike. Why? Because specifically for students, your interviews might have questions from these review reports. This will be a talking point between you and your interviewer, that how cost records and cost audit are being affected by the review report. For the people who are in job, guys, in job, your main job or the main, one of the main scopes of employment is cost records, preparation of cost records. Many CMAs are hired by big MNCs to prepare their cost records. Now, if these rules will provide for lessening of cost records compliances or reduction in preparation of cost records for certain industries, of course you are going to face difficulties in your job. You will lose your job, or job opportunities might decrease in market. I know there are many other sectors which CMAs work upon or work in, but at least one of the sectors will diminish if the scope of cost records diminish. Of course, if you are into job, then it will impact you as well. Because if the thresholds are reduced, you will definitely have some bit of reduction in scope or in profiles or in various job opportunities which CMAs have. I know many companies which hire CMA exclusively for preparing cost records. And of course, if you are in practice, cost audit scope, if it is reduced, then it will impact you. If it is increased, it will benefit you. So both ways are possible, and in this particular video I'm going to talk about both the things, the positives of the review committee report and the negatives of the committee report. I'm going to talk about both the things. So this particular video is relevant to all the CMA students, to the CMAs who are in jobs, to the CMAs who are actually practicing or are associated with some CMA firm and they are focusing on doing practice in near future. So in this particular video we're going to focus. So the report is so long and so large that one video will not justify it. Therefore I've made shorts, I made small videos. This is the third video in line. If you want to see two videos, the first two videos, link is given in the description box below. Please go over there and see those videos. In this particular video, I'm particularly focusing on two aspects of this report. Number one, cost records and cost audit. Its scope, whether it's widened, whether it's narrowed, which areas will widen the scope, which areas will narrow the scope, and how can we address the issues to the MCA regarding this particular concept called cost records and cost audit. So in this particular video, we are focusing on cost records and cost audit. Alright, so I'm going to discuss my slides into four parts: products, entities to be covered, turnover limits for cost records and cost audit, and then some miscellaneous points that will be discussed by me. So without further ado, let's start the main part. Alright, a very welcome change, a very pleasant change, a wave of cool breeze to all of you. The committee has suggested or has proposed that cost audit should be applicable, or cost record should be applicable not only on companies but also on other type of entities like cooperative societies, trust and autonomous bodies, etc. Those are particularly manufacturing the covered products. And most amazing, the first thought that came to my mind after reading about these entities is that, guys, most of the hospitals which are existingly there, or some of other entities also, but I'm aware about hospitals, are constructed in trust form, right? They are trusts. And hospitals are big. They are earning big amount of money. The revenue generation is quite large. So those hospitals which are constructed or which are developed in trust form will now come under the purview of cost records and cost audit if their turnover exceeds the statutory threshold. Similarly, cooperative societies, the big cooperative societies, of course, you cannot have all the cooperative societies under your purview, because cooperative societies might not be that big that they have a turnover of 75 crores, but many of the cooperative societies, many of the autonomous bodies, or many of the organizations will come under purview of cost audit and cost records if this proposal is accepted by the ministry. So the entities have been widened, the route has been widened, so this is a very welcome change in the committee report. Now coming on to the threshold limit, which has been increased to 75 crores. Sir, everyone is saying threshold is decreased. You are saying threshold is increased. How is this? Why is this dichotomy there, guys? I'll explain you why this confusion is there, and I'll explain you why I'm saying that threshold has increased with the help of examples. Cost records. Earlier, the limit was that if overall turnover of the company is 35 crores or more, and at least one of the products which are being manufactured by the company is under the covered list of products, then cost records must be applicable. Cost records must be maintained by the company. But sir, tell us one thing. Cost records are maintained by the company, but if cost audit is not there, then why would company maintain the cost records? No, guys. Company will maintain the cost records. Why? Because it's a statutory requirement. Plus, chartered accountants are required to comment in CARO, company's audit report order, that whether company has maintained cost records or not. So even in a situation where company was required to comply with cost records and was not supposed to get the cost audit done, even in those cases companies were complying with cost records, because miscompliance means reporting in CARO. So cost records was being adhered to. Earlier limit was, and we are talking about cost records, which means preparation of cost sheet, right? And the adjoining documents and annexures. Earlier the limit was overall turnover of the company from the covered and uncovered products should be more than or equal to 35 crores. I'll give you an example to all of you. Okay, turnover of a company from covered products is say 5 lakh rupees. So the covered product which is covered under the rules, it's only 5 lakh rupees, not even crore. Only 5 lakh rupees of turnover from the covered products. But uncovered products, the turnover is 40 crores. So, but why are we bothered about uncovered products? Yes, we are not bothered about the uncovered products, but the limit was turnover, overall turnover of the company should be 35 crores or more. And that limit is crossed. So even when, guys, this is the game changer. Even when the turnover of the covered products was only 5 lakh rupees, was only 10 lakh rupees, was only 20 lakh rupees, cost records were required to be maintained by the company for these covered products in the erstwhile regulation. This was the beauty of this limit, that even when the covered products were a meager, the turnover was meager for covered products, even then cost records was applicable. And this is how it should be. Why? Because when we are specifically talking about products, that this product is to be, cost sheet is required to be made for this particular product because it is quite complex. Industrial, steps in which it is manufactured is quite complex, quite detailed. Then turnover shouldn't matter. Turnover doesn't matter. If it's a complicated product, then even 10 lakh turnover matters to us. Even 5 lakh of sales matters to us, because we want to see what is the cost at which it is prepared. So very well thought through limit which was there earlier. In this case, even when 5 lakh rupees is only the turnover of the covered products, even then cost records were required to be prepared. But now the revised limit is 75 crores. And that too, not the overall turnover, guys. Please make note. Not the overall turnover, but turnover of the covered products, which means only this turnover is required to be seen, which means now if your covered products is of the turnover of the covered products is small, then you're not required to prepare the cost records. So the turnover virtually for cost records has increased from rupee 1 to 75 crores, and a massive increase in the turnover out here. Many companies will be out of purview of cost records if these proposed rules are adhered to, if these proposed rules are made a part of the statute, if MCA accepts these rules. Many companies will be out of the purview of cost records. Please note, we are not talking about cost audit as of now. This is the limit for cost records, for preparation of cost records. Just like you have financial records, balance sheet, profit and loss account, annexures, etc., we have cost records. So yes, a big blow to the cost accountants over here. Many companies which had an overall turnover of 35 crores or more and had a small component of covered products, they will be out of the perspective of cost records. So this is an increase in turnover, which results into a decrease in the number of companies which are preparing cost records, and which means that those companies who were earlier hiring CMAs from campus placement to prepare their cost records, they will no more be hiring CMAs for preparing their cost records. Of course, they will be hiring CMAs for their GST work, their income tax work, their Companies Act compliances, their financial compliances, and several other things. They are open to CMAs, no worries about that. But one of the main work of CMAs, which was preparation of cost records, after this proposed change will definitely get a little bit of hit. And that's my precise point. So this was the limit for cost records. Now we come on to the limit of cost audit. Okay. Now we come on to the limit of cost audit. What is the threshold limit which has been increased in case of cost audit? That's what we are going to discuss over here. Again, with examples, I'm going to tell you, because by examples you'll be able to register what will be the impact of the proposed limit. So the earlier limit was for table A products. So earlier the products were divided into two parts, table A and table B. Table A was the regulated sector, table B was the unregulated sector. Now there's no differentiation between the regulated sector and the unregulated sector. All of them will be merged to one list. So now this bifurcation will be done away with. The overall turnover of the company should be 50 crores or more, and the covered products turnover, the products which are specified, that turnover should be 25 crores or more. That was the erstwhile limit for table A products. And table B products, the overall turnover of the company should be 100 crores and the turnover of the specified product should be 35 crores. This was the erstwhile limit. Now the new limit is, again, overall turnover of the company is irrelevant. 50 crores and 100 crores is irrelevant, and the only limit is the aggregate turnover of the covered products should be 75 crores or more in any 3 preceding financial year. Now I'll take an example. So I will now split my discussion into 2 parts and will demonstrate how this proposed limit will impact each of these industries. I'm talking about 2 kind of companies. Number 1, single product company, those companies who are only making one product, and that is the covered product, which is covered under the list which is proposed by the ministry. Okay, single product, no other product. Okay, so I'll start my discussion with a single product company, a company which is manufacturing only one product, which is the covered product. Okay, now for a single company which is for a single product company which manufactures only one product, for it the aggregate turnover of the covered product and the total turnover is same, because it has only one product. So total turnover of the company is same as the turnover of that particular product. So both the things are absolutely the same. Now if you are a company which is producing the products which are covered under table A, which is the 6 regulated sectors, 6 sectors which are regulated, like fertilizers, telecommunication, these are 6 regulated sector, then guys, for you the limit has increased from 50 crores to 75 crores. Earlier your overall turnover should have been 50 crores. Now your overall turnover and the product specific turnover should be 75 crores. So if you're a table A product manufacturer and a single product manufacturer, then the turnover has increased for you, which means lesser number of companies will fall under purview of cost audit. But if you are a table B manufacturer product, you are manufacturing a product which is listed in table B, like jute and jute products, etc., then the turnover limit has reduced for you, because the earlier limit was 100 crore, the new limit is 75 crore. So I agree that in case of a single product company, if you are falling under table B, then the limit has reduced for you from 100 crore to 75 crore. Let me demonstrate with the help of an example. So if you are a covered product company, if you are a single product company which is covered under rules, then for the companies which fall under category of revenue of from 75 crore to 100 crore, earlier they were not covered, so cost audit was not applicable under the present rules, but cost audit will be applicable under the proposed rules if this is a table B product company. So yes, over here for single product company there is a benefit which is clearly seen, but for table A products there is a loss. there is a reduction in the scope, which is clearly seen. Now we talk about the multiple products companies, and over here also there are two scenarios. So if you are producing multiple products, which means you are producing products which are covered as well as you are producing products which are not covered. If you are producing both the products, then guys, I'll explain this with the help of an example. Suppose the covered products are being sold for 40 crores, the turnover is 40 crores. Uncovered products turnover is 80 crores. Total turnover of the company is 120 crores. Then guys, in the erstwhile rules, you were applicable for cost audit, because both the limits are satisfied. Overall turnover 100 crores or above. Turnover of the covered products 25 crore, 35 crore, as the case may be. So earlier you were applicable for cost audit, you were eligible for cost audit. But now, since the overall turnover of only the covered products is to be seen, you are out of purview of cost audit, because that has been increased to 75 crores. So from 25 or 35 crore, the threshold has been increased to 75 crores. So in the proposed rules, you will be out of purview of cost audit. So guys, this is the crux of the matter, that many companies which are falling under this bracket of having a individual turnover of below 75 crores for the covered products, but overall the company is really big and it's producing a lot of selling a lot of products, other products as well. Those will go out of purview of cost audit. I've again and again repeated this point, that cost audit is product specific. So if I'm telling you that this product deserves to have cost audit done, or deserves to have maintained cost records, then guys, turnover should be irrelevant. Even if it is it has a turnover of 5 lakh rupees, then also cost record should be applicable, because that's a complicated product. That's why it is appearing in that list. Nonetheless, forget about that argument. Okay, without prejudice to that argument, guys, the limit has increased for this kind of products. Many such companies will be out of purview of cost audit, because their limit for the covered products has increased from 35 crores to 75 crores. On the other hand, there are second set of companies which are multi-product companies, which tend to gain also. Okay, so following is the turnover of a company. Covered products turnover is 75 crores, and uncovered products the turnover is 20 crores. So this is another company whose covered products turnover is 75 crores, and its other uncovered products is 20 crores. So total is 95 crores. Guys, earlier this company was not covered under cost audit, but now on the proposed rules, the company will be covered under cost audit, because the covered product turnover has increased. So I know the focus is on the covered products, that's why the turnover has been increased, but to say that these rules will be only beneficial is a wrong statement. This rule will definitely reduce or waive off requirement of cost audit of many companies. So it's a mixed bag. It's a mixed bag. Okay. So yes, we have been able to analyze the applicability of the cost audit rules, and yes, the cost audit limit increase is approximately 86%, which the ministry has calculated using the inflation factor of 2014 versus 2024, so a decade, and the inflation factor has roundabout come out to be 86%, and that is how the limit has been increased to 75 crores. Any one of the 3 preceding years, the limit should be 75 crores. This 86% is also debatable. How? Now over here I've written certain points which we should think about regarding these limits, these monetary limits, which have been increased using the inflation rates, using certain indices. Okay, let us see what should we think about. 86% inflation adjustment. Okay, inflation adjustment has been done in the statutory limit of cost audit. Then my argument will be that similar inflation adjustment should also have been done in the tax audit limit, or for that matter the erstwhile GST audit limit, or for that matter any other audit which is prevalent under the Indian laws. So if you say that cost audit should be subject to inflation adjustment, then all the audits in the world or all the audits in the country should be subject to inflation adjustment. And we should say that audit is only and only applicable to the growing companies. If the company is growing and if the company is big, then only audit is applicable on those companies. For the small companies who are not having great turnover or who are not growing at that level of inflation, or some companies are little bit slow companies, those companies should not be subject to audit ever. This according to me is a wrong logic. This according to me is a wrong concept. Can we apply similar 86% of inflation adjustment in our, say, income tax slab rates. The income tax slab rate, which is 2,50,000 basic exemption in the old tax regime, if we apply 86% of increment over there, should it lead to a higher exemption for individuals in the country? Should it be done? Similarly, GST limit, which is 20 lakhs or 40 lakhs, the GST registration limit, should that also be subject to inflation adjustment? If not, then why only cost audit? That is the question that I am not asking from you, but from myself. I'm not able to understand why 86% adjustment, why inflation is being adjusted. This is not pricing. This is not price of a product that inflation is to be adjusted. These are not remuneration of workers where the inflation adjustment should be carried on. These are not retirement benefits or provident fund benefits that inflation has to be adjusted. These are statutory limit for conducting cost audit. What has inflation to do with the limits of cost audit? And if yes, then similar adjustment should be done in statutory audit, GST audit, internal audit, income tax audit, secretarial audit, every other audit. That's my first point to ponder. And guys, this is not a answer that I'm giving you. This is not an answer. This is a question which I'm asking to myself and all of you. Number two, what will happen after a decade? So if this continues, if this 86% increase continues, because if this has happened today, this will happen tomorrow, this will happen after 10 years, after 20 years, after 30 years, this will keep on increasing, then there will be one day when only the Ambanis, Tatas, Birlas of the world will be eligible for cost audit, because if this inflation adjustment is done, then the turnover will keep on increasing. And the biggest question is, will then no new companies be subject to cost audit? Are you saying that all the small companies or the new companies should be exempt from cost audit just because their turnover is quite less? Are you saying that? Doesn't new companies require cost audit? Won't they have some costing benefits? Their cost sheet should not be analyzed. Their cost audit should not be done. Are you saying that new companies should be devoid of cost audit? Are you saying that? Or cost records for that matter? Are you saying that? Well, I don't know. What will happen after 1 decade or 2 decades? What will happen if this adjustment keeps on running at the same rate, even higher, which is 86%? What will happen after 10 years or 20 years? Next, cost audit is product based and not company based. I've already discussed this point, guys, with all of you. Cost audit is applicable to a particular product and not company. Statutory audit is applicable on a company. Secretarial audit is applicable on a company. Even other audits are applicable on companies or type of entity. But cost audit is applicable on a product. So it is a possibility that only one product is eligible for cost audit, other products are not eligible for cost audit. So cost audit is product based. And hence, there is no monetary threshold required under cost audit. Yes, for materiality purpose, a threshold of say 1 crore, 2 crore or 5 crores is still understandable, like tax audit, okay? In tax audit, the monetary threshold is 10 crores. So a bare minimum threshold so that, ease of doing small business, ease of doing business is enforced, that is acceptable. But a huge turnover of say 75 crores or 100 crores, absolutely not envisaged. So turnover criteria should be done away with, or product based criteria should be done away with. Then you say that all the companies which are falling under 75 crore turnover category are eligible for cost audit. Do away with the product based approach, or do away with the monetary threshold. Because logically, both of them put in together are not serving the purpose. What is the purpose? Purpose is to prepare cost sheet or to get cost sheet prepared or cost audit done of the industries where complicated costing system is existing. So according to me, cost audit is product based and not company based, and hence the monetary threshold limits are quite questionable. Last but not all the least, what will happen to cost records? Are you saying that 75 crores, such a big turnover, cost records are required to be maintained, which means that small companies are not required to prepare cost records at all? Which means cost sheet, the methods of cost saving, cost control are not relevant for small entities? Forget about cost audit for a moment. Forget about cost audit. But cost records are not really important for small companies. 75 crore is a big turnover. So I don't think eliminating cost records altogether, or reducing its scope from a product which is earning 5 lakh of turnover versus 75 crore turnover, making such a huge gap in cost records is a advisable move. So cost records are also to be mandated apart from cost audit, that too for the industries which are specified industries, at a much lesser threshold. Example I had already given you in my this slide, that how a 5 lakh rupees turnover company was eligible for cost records in the earlier regime, but in the new regime it has been excluded. This slide is to be referred to. So these are certain points which I think we should think about when we are analyzing this proposed committee report. Of course, there are many positives in the report. For sure, there are many positives in the report, but the harping point or the pain points, it's a natural phenomenon. No, your body is a wholesome gamut of universe. If there's some problem in your body, like I have a toothache, then whatever is the pain area, I'm going to treat it first. Of course, well-being of the entire body is important. What is improving is also important, but the pain area has to be treated first, and therefore the pain areas are also to be treated. All right. The last slide is related to miscellaneous points, certain miscellaneous points which I want to refer to in respect to cost records and cost audit. Number one, once cost audit, always cost audit. This was an unsaid rule. It was not written anywhere in the erstwhile law. It was not written anywhere, but it was an unsaid rule that once cost audit is applicable, it is applicable forever. Earlier, there were certain FAQs which are released by the institute, which have now been withdrawn. New FAQs do not have this principle at all. That is a different matter altogether. But now, in the proposed rules, it's very clear that this rule is eliminated. Once cost audit, always cost audit, this rule is eliminated. According to me, a good move that, from a scope perspective, if we see scope, then yes, scope is reduced. But if we see rationale, then guys, if once cost audit is applicable, it will be applicable forever, even when the threshold limit is also reduced, materiality is also breached. It doesn't make sense. So the proposed rules eliminate this principle, which according to me is a good move. Board meeting and audit committee representation for the cost auditor, brilliant move, and an attempt to really give impetus and importance to the cost auditors, which were missing earlier. So board meeting representations and audit committee representation to the cost auditors are must, they are required, and of course this is a very good move. Next, appointment, resignation and rotation is to be paralleled with the provisions which are existing for statutory auditor. This will mean that probably appointment of cost auditors will also be done by shareholders. The resignation and rotation rules will also be applicable, whatever are applicable to the statutory auditors. To my mind, why were cost auditors being appointed by the board of directors? Because if board of directors are appointing the cost auditors, then the audit report is also to be furnished to the board of directors. Now, if cost auditors are being appointed by the shareholders, then the audit report will also be handed over to the shareholders, which means that the cost audit report will be circulated publicly. And this is exactly what we were trying to avoid earlier. But if you say that there's no secrecy in cost audit report, then circulating it to shareholders is a good move. But if you think that no sir, cost audit report has got certain critical elements about the company, like material cost, employee cost, overheads, the ratio, gross profit margins, what is the ratio of different material which are being used. If these secrets are let go of the world, then it will create problem, competitive disadvantage to the company. If you say that, then this is a unwarranted move. Shareholders must not appoint the cost auditors, and the audit report should also not go to the shareholders. Board of directors should appoint the cost auditors, and board of directors should only have the privy to the cost audit report. That is the catch in this particular point, according to me. So yes, this point is to be deliberated upon. I don't know whether it's positive or negative, but if shareholders are privy to cost audit report, then secrecy or competitive disadvantage kind of problems might arise. Last but not all the least, infrastructure projects are being harped upon in the report in a very great way. It is a brilliant positive move. All the infrastructure projects which are related to the government, they are to be discussed over here, and those are to be cost audited, which is a very good move. Then PLI schemes are to be cost audited, which is again a very good move. So both of these points are quite positive points. Specifically talking about the PLI schemes, production linked schemes, these are various schemes whereby government gives incentives to the people who are of a particular sector. For example, Bangalore gave huge incentives to the IT sector when they established their factories, their companies, their premises in Bangalore, right? So according to this scheme, government will give you incentives if you make certain expenditure, like expenditure in infrastructure, capital, equipments, machinery, plant relating to a particular sector. Of course, in this particular area, expenses is the key. So government needs an audit report regarding what expenditures has been done by the company. Now, over here, there is a recommendation of the committee that cost accountant should definitely be a critical part of the certification process. But unfortunately, there is an inclusion of chartered accountants also in this particular area. Guys, according to me, this is not the area which is pertaining to chartered accountants, and hence this recommendation should be amended. It says that the committee recommends that every PLI scheme may include a provision of independent audit clause requiring audit by an independent auditor, cost accountant or chartered accountant. Now this is the key, because as far as expenses allocation of the scheme etc are concerned, only cost accountants are the best persons to prepare this audit report. So according to me, this recommendation should be improved, and chartered accountants should not be a part of this particular clause, and only cost accountants should be eligible to do these audits which are required as per the schemes, because expenses, costs, these are the areas which cost accountants have an expertise in. So these are certain miscellaneous points which I want to discuss. Now, last but not at all the least, the new industries which are added and the deletions which are made. So yes, plethora of industries which have come under purview of cost records, and it's a brilliant good news for all of us. So all these industries are coming in the addition to the cost audit records and cost accounting records and cost audit. Gems and jewelry, films, media, entertainment, waste management, hospitality, hotels. This is a big opportunity. IT services, company involving food processing, couriering, paints and varnishes, online information data retrieval, OIDAR, popularly known as OIDAR, sheets for veneering, particle board, fiber board, ties, marble, ceramic items, unmanned aircraft. Now please understand this very important fact. I've seen a lot of mistakes in a lot of documents which I've seen. This is not unarmed aircraft. This is unmanned aircraft. Many PDFs which are circulating right now on social media say that unarmed aircraft is coming under purview of cost records. No. Unmanned aircraft, not unarmed. Unarmed means which are devoid of arms and ammunitions, which means even automobile sector is included, but automobile sector is not included, unfortunately, and that should be included. Automobile sector is one of the key sectors which should be included in cost records and cost audit. So please correct this this notion. It's not unarmed aircrafts, it's unmanned aircraft which has been inserted. Okay. Then specialized vehicle for defense forces, police forces, paramilitary staff, whatever special vehicles like tankers, like jeeps, etc., which are prepared for special forces, they are to be included. Uncoated craft paper, paperboard, corrugated paper and paperboard, these are included. Then what are excluded? Glass, milk powder, rubber, tea, coffee. Not a major exclusion. And I've heard that textile was also being discussed as one of the exclusions, but efforts of our institute members have bore fruits for us. Textiles is not excluded as of now. Okay. Now, one very important change which I saw in the coverage of cost records is that earlier construction industry was included. Construction industry, which is not the private construction industry like building of flats or the residential projects, not those, but industrial projects, commercial projects, special economic zone, development of irrigation power plants, or certain commercial projects like commercial complexes, etc., that was included in the construction industry. But now the new wordings are that construction services relating to following infrastructure projects are noted over here. I'm not harping upon that. My harping upon point is where government expenditure is involved. After introducing these words, all the private players who are into commercial or industrial real estate development, they come out of purview of cost records and cost audit. So this is a significant change in coverage. Earlier, whether you have your government expenditure in your company or not, whether government expenditure was there or not, it was covered. But now only those construction services where government expenditure is involved, right? Like you are a special economic zone creator, or you are a commercial industrial development person, real estate person who's contributing to real estate, not residential but commercial. Earlier you were included in the records, but now only if your capital is having some government contribution, only then you will be included in cost records and cost audit. This is a significant change which I've observed in the erstwhile rule as compared to the current rules. So yes, these were the areas or the products which are added or deleted. Now a mixed bag, right? A mixed bag. Happiness and sadness together. We need to analyze both of them, and yes, at least for the negatives, we need to write to the industry. So clear message to all the members in our industry, all the members in practice, all the pain points which I've highlighted, all the points which are negatives which I've highlighted. Please write your comments, and the method is absolutely clear. You go to MCA website, there's a link, and over there you put in your comments. Please put in your comments regarding certain pain points that we are feeling right now. And yes, this is the third video. I'll be coming up with I think 1 or 2 more videos because the subject is vast. But yes, it's really important to discuss this topic. It's really important to maneuver the thoughts, or just scan through the thoughts and recommend the relevant thoughts which we think will be betterment for the profession and for the industry at large. So yes, that's all for this particular video, guys. I'll be coming up with more videos on this topic because the report is huge. Till that time, all the very best and happy studying.